Good day, good day, good day. My name is Howard Martell. We'll continue on with our series. That's right. We're going to be talking about most of us have never been taught the rules of the money game. What's the difference between tax deferred and tax free? What is an index account really? And where do silver and multiple income streams fit in? Today, I want to give you a clear, simple roadmap. How IRAs, Roths, 401ks work, what index strategy are, why some people add silver, and how building multiple streams can make you more resilient. I'm Howard Martell, home-based business owner, small disadvantaged veteran-owned business owner, also an investor in precious metals at kepm.com, and a future licensed consultant with a local financial consulting group. My job is education first, help everyday people understand their options so they can be informed decisions with licensed professionals. This video is educational, not personal. Financial advice. Everyone's situation is different. Part one: tax deferred, tax free Roth, the buckets. Key concept: accounts are buckets. Traditional IRA versus 401k. Grow now, pay taxes later. Often tax deductible contributions subject to rules. Money grows tax deferred. You pay income tax when you withdraw in retirement. Good fit when you want to lower today's taxable income. You're expected to be in the same or lower tax bracket later. Roth IRA or Roth 401k. Tax now, tax free later. Contributions made with after tax dollars. Money grows tax free. Qualified withdrawals in retirement are tax free under current law. Good fit when you're in a lower tax bracket now. You think taxes may be higher in the future. You want flexibility with tax free income in retirement. Think of an IRA and 401ks as buckets. Some buckets are tax deferred, some are tax free Roth. The question is, which mix of buckets makes sense for you? What is an indexed account? Our high level concept. An index account is a strategy where your interest is linked to a market index like the S&P 500, but you're not directly invested in an index like a mutual fund or ETF, which is electronic transfer fund. Basic idea. Don't name the product, just the concept. When the index goes up, you may get a portion of that upside credited as interest, subject to caps or participation rates. Typically, the standard rate is 11%. If it goes above that or below that, that means you just keep that rate. And that means you're not going to lose anything when the market goes up. You increase. When the market goes down, you don't lose anything. Now that's smart investing. When the index goes down, you may have a floor, often 11%. So you don't get negative interest from a bad year in the index. Example, you put $10,000 in year one, the index up 12%. Maybe you get 8% capped. So if it's 11%, the investors keep the rest, or the insurance index keeps the rest. Year two, index down 15%, you get zero, floor, no loss from index. But if you're in a 401k or TSP, you lose money. Year three, index up 5%, you get 5% to bucket. So now you have 11 and 5, you have 16% right now that it's growing. Not a quarter guarantee, just a way to understand the idea. Teaching line: index strategies try to give you a middle path. You don't capture every bit of upside, but you aim to avoid the worst of the downside with rules, caps, and fees that a licensed consultant must explain. Bank versus CD versus tax advantage conceptual. Compare three homes for money. Bank savings account, very safe, very liquid. Interest rate is usually low. Interest is taxable each year. Great for emergency funds, short term needs. Challenge: often loses ground to inflation over time. Certificate of deposit, still safe. Bank issued. You lock the money for a set term, typically higher rates than a regular savings account. Interest usually taxable each year. Penalties if you withdraw early. Tax advantage index strategies focus on long term growth plus protection, often with tax deferred or potentially tax advantage treatment. Potential benefits: more growth potential than basic savings and CD, protection from market down years, the floor. Tax advantages on growth if structured properly for your situation. Trade offs: more complexity, more rules and fees, longer time horizon, not FDIC, relies on financial strength of the issuing company. Teaching line: banks and CDs are about safety and access. Indexed advantage strategies are about protection, growth, plus tax benefits over the long run. And they require good education before you decide if they fit. Part four: why some people add silver, kepm.com. Alongside retirement accounts and index strategies, some people add precious metals like silver and gold, especially in the chaotic times we live in on a world scale. Silver, for my personal consumption has went up 147%. Right now, in the futures market, it is up almost at $94. What the experts are potentially predicting, from what I've been listening to, that it could hit 100, 120 by the summer. It could go quicker if there's some kind of event globally that might affect it. Why? It's a hedge against inflation, it's currency debasement, diversification away from our own paper asset, the dollar. Long history as a store of value. Silver characteristics used in solar, electronics, tech, and more industrial and monetary metal. Now it's also used in the military weapon systems and a lot of the stuff. Often more volatile than gold, moves more in both directions, can add extra punch and add extra risk to metals allocation. Your connection. I've personally worked with KEPIM for the last 2 years to acquire silver and gold as part of my long-term play. Right now, silver. They're going to call me up when we hit a certain threshold. We've already got a huge upside right now. So when I get that call, we're going to take a certain portion of my stewardship dollars, that silver profits, and we're going to buy gold and have more. So you see what I'm doing? It's not as a get rich quick move, but one component in a broader stewardship strategy. Teaching and warning. Metals don't replace retirement accounts, income, or emergency savings. They complement them. It's a well-rounded portfolio. Multiple streams of income, your role, why multiple streams matter. One employer, one contract, one platform equals fragile. Healthier models, primary job and contract, retirement and investment accounts, and precious metals slice. Home businesses or side consulting, maybe rental or other streams over time. Your role, I help people in two ways: financial education and strategy. As a home based business owner and future licensed consultant with this financial organization, I can help you understand tax deferred versus tax free buckets. I explain the index based strategy to plain English and talk about where silver and other assets may fit in. Now, I won't mention that, but I let people know that, hey, I invest in silver because it's a good investment right now. Then connect you with a licensed professional like myself when I get my license and the right tools for your situation. Multiple streams of income, home business growth through my online business, AI content co-pilot for home business growth, which is in the description, and one marketplace, which is curated products on a global scale. We'll be launching globally into more countries come May of 2026. I help you learn how to build extra income streams using the internet and AI without burning out. My local invite, if you're in the Greater Hampton Roads, Virginia Beach, Virginia area, you're invited to Money 101 events at the Westin in Virginia Beach. It's a 1 hour educational session. There's no pressure, no sales, and at the end, they feed you. That's right. So come fed, because it starts sharp at 6:30. We we go through these concepts with slides and real examples. To contact me to get dates or talk about the situation, you can email me, and I'm gonna show this on the screen right now. So you have this. So just bear with me. I wanted this to be really short and poignant, but I want to make sure that you understand how to contact me, right? So my multiple streams of income right here. I will put this in here in the text bar, right? It's crucial, people. I'm just telling you that it's very, very crucial that you understand how money works. How money works. So you can contact me here, right? This is my income streams. Now let me go here to this. Let me go to my bucket. Just bear with me. All right. My local invites right here, right? My contact information is right here. To get dates or talk about the situation, you can email me and just say, hey, I'm looking for more information. Now, this is in the Virginia area that you can do that, right? Now, as of the 29th, I will be leaving my 30 plus year cyber career to work in the educational and financial realm. I'm excited about it because this is my wheelhouse. You can email me out there, or you can go and join my Facebook page and you can instant message me. If this helped you, hit like and subscribe. Share it with someone who never got real money education but needs one. Remember, the goal isn't chasing the hottest thing. The goal is to build a balanced resilience plan you can actually understand. Okay? And then this is just my description that I have here. So let's go here to this. As I said before, let me show this for the audience. There you go. That's my multiple streams of income right there, okay? If you want to reach out to me and contact me, Go right here, contact information. I'll do this right here, giving you all the kitten and caboodles. Okay. Okay, got that. And then we have this. That's how to contact me right there. That's my contact information. Also, please like and subscribe if you enjoyed this content. Take care. God bless. I'm looking forward to helping each and every one of you meet your financial goals.